All right, I've got your Edmonton housing market update for November 2024. We're going to be looking at everything from the housing market as a whole, detached homes, half duplexes, townhouses, and apartments. And we'll also be looking at the benchmark prices for all of those. Each of these market segments performs differently. They're all different beasts, so make sure to watch the rest of the video. But before we get into that, here on this channel and in my new school community, Real Estate with Trevor, I focus on giving you market insights and helping you along the process of buying or selling homes in the Edmonton area. So if you want to check that out, I've got the link in the description to join the group, but let's jump right into the video. Let's start with the market as a whole. So the market as a whole was sitting at an absorption rate of 46.4%, which had it on the upper reaches of a balanced market, not too far off from the seller's market. And I can tell you that that does fit with my experience over the last couple of months in Edmonton. Instead of things slowing down going into the fall, they actually picking up, believe it or not. Now that is an increase in the absorption rate from September when it was at 37. It was more in the middle of a balanced market, but it pushed up a little bit to 46% in October. We'll go further through, but a lot of that's like the sales were picking up, but the inventory wasn't keeping pace. Average price for the market as a whole was sitting at $419,177. At the end of October, there was 3,761 active listings, and there had been 1,745 sales. Now the listings were down 8.76% from the month before and down 14.37% from October 2023, but the sales were up 13.24% from September and up a whopping 35.27% from October of last year. So that's really what's changing the absorption rate and the market balance there. Average days on market was sitting at 38 days. Same thing as in September when it was at 38 days. It's still up a little bit from August when it was at 34, but in October 2023, it was all the way up at 46. So much different market this year than what we saw last year in October. In terms of market distribution, under 200,000, you've got 16.6% of the market. 2 to 300,000 is 15.28% of the market, and 3 to 400,000 is 20.1% of the market. Then the biggest segment is between 4 and 500,000 with 21.87% of the market, and then a big drop off after 5. Between 5 and 600,000, you got 12.9% of the market, and 6.6% of the market between 6 and 700K, and then 2.8% between 7 and 800K, and 1.5% between 8 and 900K. Gets pretty small after that. Now let's take a look at the composite benchmark pricing for the market as a whole. So the benchmark price for the composite index was sitting at $391,800 in October 2024. You can see that that is down from the peak that we hit this year, which was in June 2024 when it was sitting at $399,400. But I also wanted to point out how much different the pricing is in this October compared to last year. In October 2023, we were down at $386,500, and October 2022, it was at $364,900. So it's a pretty substantial gain in the last 2 years, even if we're just comparing the same month of the year. Market as a whole appears to still be lower than some of the peaks that we saw in 2022, but it certainly seems like some people are getting excited again since interest rates have been dropping. All right, let's move on to the next segment. Now for detached homes. So detached homes were sitting at an absorption rate of 44.43%, which also went up from September when it was sitting at 35%. So this is still balanced market territory, but leaning a little bit more towards the right, closer to a seller's market. Average price for detached homes was $549,030, and the number of active listings at the end of the month was 2,082, and there had been 925 sales in the month of October. So the listings were down 9.08% from September and 16.12% from October of last year, and the sales were up 15.34% from September and up 32.71% from October 2023. So following roughly the same kind of overall picture that we saw with the market as a whole. So you can see the detached home market is a big part of that. Average days on market was sitting at 38 days versus 36 days the month before and 41 days the year before. In terms of price distribution, you had 1.1% of the market under 200K, 4.2% between 2 and 300K, 18.5% between 3 and 400K, and the biggest segment at 30.8% between 4 and 500K, also matches biggest segment for the market as a whole. And then between 5 and 600K, you had 21.7% of the market, and it drops down to 11.6% between 6 and 700K, and 5.1% between 7 and 800K. 8 to 900K is 2.7%, and then 900K to $1 million is 1.22%. That's how it's spread out for detached homes. Let's take a look at the benchmark prices for both one-story single-family homes and two-story single-family homes. Okay, so one-story single-family homes, that would include like bungalows and bi-levels for the most part. You'd still typically have a basement, but no additional second level. October 2024 benchmark price went down to $409,100. It had peaked in July at $419,000, so it's down about 10K from the peak during the summer. And comparing that to the last two Octobers, in October 2023, it was $372,300, and October 2022 was $362,400. It does look like right now in October, we're pretty dang close to what the peak was in 2022, sometime in the summer there. It's normal to see a dip in the fall. That's nothing crazy, and we are up substantially from the last couple of years going into the fall. And now that interest rates are lower, we're certainly seeing some excitement, and I wouldn't be surprised if we see that carrying forward into next year. Now for the benchmark prices on the two-story single-family homes. October 2024 saw a benchmark price of $521,100. It's down a little bit from June 2024 when it was at $525,200, and you compare that to the last two Octobers. October 2023 was $482,300, and October 2022 is $474,900. What's interesting on the two stories is that we're actually a little bit below the peak from 2022 versus the one stories where you're still at or slightly above in some cases. So two-story homes tend to be more expensive. Like you can see $521,000 versus $409,000. I do think that lower price under $500,000 for sure is more active, as you've seen in the other stats. So that helps to prop up values in those market segments and prices. Whereas two-story homes, especially if you get into bigger ones or newer ones, they're out of reach for a lot of people. So I don't think there's quite as much upward pressure on the prices there, but still performing very well in terms of price growth in 2024. Now for the semi-detached market. So this is going to include like half duplexes and what we call residential attached properties. Semi-detached is just half duplexes. That's when you're connected to one other neighbor and you don't have any condo fees. This was sitting at an absorption rate of 58.11%, which is still seller's market territory. It's not quite as high as it was in August or even April or May. It's about where we were at in March. So this market is still quite tight. It went up a little bit from September when it was sitting at 54%, but that was still a seller's market anyway. This has basically remained in a seller's market since February is when it first entered seller's market territory. Average price was sitting at $410,187. There had been 296 active listings at the end of the month, and there was 172 sales. So the listings were actually up 1.37% from September. This is the one market segment we've seen so far where listings were up, but not a lot. But they were still down 15.67% from October of last year. And the sales were up 8.18% from September 2024 and up 31.3% from October of last year. Average days on market was sitting at 31 versus 30 days last month, and it was also 30 days in August. Gone all the way down to 25 days in May and 26 days in July. But if you look back last year in October, it was sitting at 44 days. So this market really tightened up this year, and that's why we've seen it in a seller's market. Market distribution under 200K was 1.2% of the market, 10.6% between 2 and 300K, 33.9% between 3 and 400K, and 38.7% biggest segment between 4 and 500K. Then a huge drop off again, and you've got 11.2% between 5 and 600K, and just over 3% between 6 and 700K. And that's pretty much all of it. Don't have the benchmark pricing for this segment, so we're going to move into the next segment. Okay, now for row and townhouses. So this should include townhouse condos and row houses, or what we call residential attached. Most of it would be townhouse condos. That's a bigger section of the market, so that's going to be the biggest weighting in here. You can see that this was sitting at an absorption rate of 73.01%, which is pretty insane. So that's a strong seller's market. It jumped up again from September when it was at 56%. It had already kind of peaked in April the first time at 86.56%, and even in August it went over 81% again. So this has been pretty seller's market heavy since February again, and even in January it was already at 45, so it was high end of a balanced market. So this has probably been one of the strongest performing markets this year in terms of demand and price growth. Average price was sitting at $297,917. There was 389 active listings at the end of October, and there'd been 284 sales. So the listings were down 13.94% from September and down 23.12% from October of last year. And the sales were up 10.51% from September and up 30.28% from October 2023. So pretty tight numbers in there. 35 days on market on average average versus 36 days last month. It was 29 days in August, and we saw 2 months of 24 days in May and June. Last year in October was 42 days. So things have really shifted in this market. Under 200K is 20.6% of the market, almost tied for the biggest segment. It was between 2 and 300K with 34.7% of the market, and between 3 and 400K it was 35.2% of the market. After 400K, a huge drop off, and that's just over 8% of the market between 4 and 500K. Now let's look at the benchmark prices for townhouses. All right, so here's the townhouse benchmark price. In October 2024, it was sitting at $262,600. It's just barely down from the peak we saw this year in August of 2024, which was already a little odd. Usually the peak would be like June, maybe May. We saw a little dip there, then it went up again in August, it got tight, and then it's just dipped a little bit, and it actually went up again slightly from September. That's explained just from the absorption rate there. It got tighter again from September, so it's not crazy to see prices go up again. This one looks quite a bit different than the other charts that we've looked at, in that it's seen a much stronger trajectory this year, and it's also well surpassed its 2022 peak. Like 2022 peak was under 250,000, and we're in the 260s now. It's not like it massively passed it, but it more passed it than any of the other markets that we've looked at. Now, I think this is largely caused by the fact that townhouses are still cheaper than detached homes, and it is something that works better for a family. So if you're a family, obviously, usually the preference is to get a detached home, or if you can't get that, you might get a half duplex or residential attached. And if you can't get that, then that's when you're gonna look at townhouses. And I think that's caused a lot of the price growth and demand this year, as you can get 3-bedroom, 2.5 bath townhouses, especially if they're newer. So that works well for families. And so that's driving a lot of the demand, and why I think we've seen such strong price growth this year. Wouldn't be surprised if that continues. It doesn't appear to be letting up in terms of the demand there. Unless a whole bunch of people list their properties, maybe it could balance out again, but it's been going pretty strong for townhouses this year. Probably the biggest growth I've seen in them for quite a while. All right, so now we're looking at the apartment condo market. It's sitting at an absorption rate of 32.13%, so just on the cusp between buyer's market and balanced market. Certainly feels more like a buyer's market most of the time. Average price was sitting at $188,051. There was 1,133 active listings at the end of October, and there had been 364 sales. So the listings were still down 11.97% from September and down 10.43% from October of last year. So we're still seeing less listings for our apartment condos than what we've seen in the past, just not to the same degree as the other markets. Sales were up 11.66% from September and up 43.31% from October of last year. So pretty big difference in terms of sales volume from October last year to now. So this market is shifting, but it's a pretty big market segment, like 1,100 listings. So it takes quite a few extra sales to cause a big shift. Average days on market was sitting at 45. It was 49 days last month, and it was 63 days in October of last year. Under 200K, you're sitting at 60.55% of the market. So vast majority is under 200K, and 30.7% of the market between 200 and 300K, and then 3 to 400K is 5.8% of the market, and then 1.5 between 4 and 500K. So like ultra luxury condo, apartment condo, basically at that price point. Now let's look at the benchmark prices for apartment condos. All right, so benchmark prices for apartment condos were sitting at $190,200 in October 2024. It had peaked in June 2024 at $194,100. And if you look at the last two Octobers, October 2023, it was $172,000, and October 2022, it was $168,300. Apartments are kind of going their own way, much different than the rest of the Edmonton market. It is a little bit surprising, I think I mentioned this last month, to see that kind of growth this year in apartment condos, because it still didn't feel like it. It's been a depressed market for quite a while. So if you really think about it, it's not that surprising if sales do pick up and there is a little bit more demand, that you could get some modest price growth relatively quickly, just because they had been so low for so long. We're at higher prices for apartment condos than we have been in the last 5 years. If you go back further, you would have seen that there were periods that were higher than they are now. I would say this market is still in recovery from a price perspective. Still a lot of people that are either underwater on their apartment condos or have to sell them for much less than they bought them for, depending on when they bought bought them, but it has been shifting over the past couple years here, and it'll just be interesting to kind of see what happens going forward. So that wraps it up for our Edmonton housing market update for November 2024. If you got value out of this video and you'd like to connect with me further, I suggest signing up for my free community, YEG Real Estate with Trevor. The link is in the description. Early stages right now, but if you join, you'll be one of the first in there to see what we're doing, where I'll be posting, obviously, the PDFs for these market updates will be in there. And it's also a much better place for discussion instead of just on the YouTube video. So hop on in there. It's going to continue to evolve. I'll be giving you guys market insights, updates, and also just a good place to connect with other people and talk about Edmonton real estate. So thanks so much for watching. Remember to like and subscribe, and I will see you on the next video.